Ladies and gentlemen, good evening. It is the 25th of May, 2016. This is the iGold Advisor channel, and I want to welcome everyone to this Wednesday evening broadcast here on the eastern seaboard of the United States. And to anyone who is new to the precious metals market, welcome to the first shakeout that we have seen thus far. And I will explain what I mean by a shakeout as we get into this video. A shakeout is similar to what it might sound like when we look at this picture of someone up above shaking an apple tree to dislodge and collect all of the low, easily available fruit. So a shakeout in the precious metals market is what we've seen over the last couple of weeks, where amidst a $1 or $2 drop in silver and a $75 drop in gold, you can have some of the gold and silver mining companies drop 20 or 30% over the course of a couple of weeks. And this is essentially behavior by the market that is designed to try to take your shares from you, because the market will be moving higher over the course of the next several years. And these are market participants that like to take the shares from you at this early juncture. So it's important to be accustomed to this type of volatility, especially if you are in silver or the silver shares. We know silver is a lot more volatile than gold, and therefore the silver companies are even more volatile than the gold companies. As we start to look at the prices of gold and silver over the last several days, we can see that decline that we had yesterday on Tuesday, strong down day the whole day, taking us into the low 1200s. And we saw that day, and we saw, for example, certain of the mining companies down 7, 8, 10, 15% in one day. It's incredible, the shakeout that we are seeing. It's a good time to ascertain your tolerance to this type of volatility, because as we have seen, there will be massive, massive gains over the next year or two, but there will be these shakeouts as the market tries to take your position away from you. You simply have to decide, is this within your tolerance level? It's not a judgment. It's not a value statement. It's simply knowing yourself. What type of investor are you? Can you handle the volatility for what we believe is going to be some life-altering opportunities here over the next several years? As we look at silver, notably not as weak as gold, right? We had that strong down day yesterday in gold, and silver basically just treading water. An interesting little spike here, only 10 cents or so on the spot level in the overnight hours in Hong Kong. But as we have seen over the last few months, when we have these spikes start to materialize in Hong Kong, they tend to signal something the next day positive for the price of the metals in continuation. So let's look out for this on Thursday. It may be a nice day on Thursday for the metals. I want to start by looking at silver this week as opposed to gold. Silver, as we look here over the last year and a half. And what can we say about this action in silver? Well, just to rewind for everyone, we had this bottoming wedge pattern that had formed over the last several years. And we saw the breakout from that right at the beginning of February. A breakout and then a bit of a consolidation after the breakout before we finally broke through the 1625 zone, which was resistance going back here from October, resistance from 2015 in June. So this market broke above that, hit just above $18 before coming back now into the low 16s. So can you see here how this resistance level, which held prices back 1, 2, 3, at least 3, if not 4 times, we are coming back to this level now, which is also strongly matching with the uptrend that was formed from the beginning of the move higher. Now, everything that I see in my analysis is showing me that silver is finding a bottom in this region, in the low 16s, perhaps upper 15s as a spike lower, but it really looks to me in the 1620 region is where we are finding a bottom. Now, I want to do a little rewind to the year 2008. Let's switch that over. And we were looking at the decline from 2008, and we're going to compare this to today. In 2008, silver formed a bottoming wedge pattern, very similar to the one that we are seeing today, toward the later stages of the decline. You can see that right here in the turquoise color. For anyone who's new, all the colors stay the same on all of my charts. They are designed to draw your eye to the important points. And on this chart, we have a lot of important points, I realize, but I will explain it. If you give me a few minutes, I will explain what is happening here on this chart. So we had a bottoming wedge pattern that broke at the end of October. And I remember studying this pattern as it was forming in 2008. And mind you, this was coming down all the way from $20, 20 all the way down to $8.50. So over a 50% decline. And this wedge pattern broke. And then pay attention to the price action that formed after such a severe decline, because I believe we are seeing similar price action in silver now, just on a different scale. So the price broke from this wedge and moved up to roughly 1050. We're calling that the first reaction high. It's the first notable high from the bottom, 1050. What happened then? Silver came back down to around 9 and made a second attempt right here, late November at 1050. It failed again, fell back down in December, and on the third attempt, labeled right here, breakout, silver finally moved above the 1050 level. Now, this looks like, well, it's just small little movements, but mind you, this is a 20% swing from 850 to 1050, 20%, roughly the swing that we've seen in silver over the last several weeks. So when silver broke out here, shown in red above 1050, it made what? A new reaction high. A new reaction high similar to the first reaction high, just on a new level, hitting 1150. After that, silver backed down to retest the former reaction high level, this resistance level around 1050 that then acted as support on a retest. Silver then moved back up again, a second attempt at the 1150 level before falling back down again to 1050. So these numbers are not random here. When we have a significant level that has held the price back for multiple attempts, and then it breaks through, and then it retests that same level multiple times, that is happening for a reason. The reason being all of the sellers were exhausted at this level, and buyers remain at this level, stepping in at these retest zones. Once again, the second retest in early 2009 of the 1050 level, and what happened? It finally broke through on the third attempt, breaking through 1150. Breakout shown right here in the red circle. The price then accelerated up to 1450. So right here we're showing basically the series of reaction highs that formed in silver, breakouts, retests, breakouts again. Now, that was from 2008. Let's move it back to the present, and let's zoom this out to look at this over the 3-year time frame. What we are seeing here is a very similar setup in silver, just on a longer time scale. Everything is taking, from what I can see, about twice as long to play out. So the price action below 16.25 took about a year to play out for this bottoming region, whereas the price of silver below 10.50 on the previous slide took only about 4 months to play out. So we have 12 months of price action below 16.50, and now we have broken out of 16.50, coming back to that support level. The 16 to 16.25 support labeled right here looks very similar to that 10.50 region from 2008. That once it broke through, then came back to retest, not once, but twice before moving higher from the initial target zone. So it looks very much to me like silver is going to be consolidating, perhaps forming something of a right shoulder for an embedded larger head and shoulders pattern. It looks like that right shoulder is being carved out now. I originally thought there was the possibility that would move higher first and then carve out the shoulder. It looks like this is being carved out now. So silver looks to be finding strong support in the low 16s, perhaps a brief spike low to the upper 15s, but I would say most of the risk is out of silver. If you are just looking at this market for the first time and have seen this drop, you are probably at a very good level of support here, similar to what we saw in 2008. Another proprietary indicator that I use in my technical analysis, I don't see a whole lot of people mention this side of things, but I have a friend and a fellow trader who is in Toronto. I won't mention his name, but if you were watching this, my friend, this is the type of action that we are talking about for this signal. Of course, we are talking about Silver Wheaton, which is one of the strongest large silver mining companies, and we are talking about SLV, which is a paper fund for silver that I do not recommend that you own. I'm simply showing it here for comparison purposes. And we're looking at this over the last 1 month. And I just want to ask you, this company that derives the majority of its profits from the price of silver, what is going on here in the last several weeks as silver has continued to move lower, but the valuation of this large silver mining company has basically continued to consolidate? So this is another piece of evidence that I see that tells me that the move lower in silver is nearing its end and is finding strong support. If the sum of the investors in this company are not pricing in lower silver bullion prices, this would probably be a very good setup for a trade. If I wanted to make an aggressive trade, which I do from time to time, and I am thinking about making this a little bit more public, showing the mechanism by which I would make these trades. Of course, this would only be appropriate for individuals with a very high level of risk tolerance, because typically for these short-term trades, I like to trade on a slightly leveraged basis and then take those profits, if successful, and go ahead and buy physical bullion with them, and then kind of set that on the side as a successful trade. So it looks to me like silver is setting up here to come back into the mid-region relative to the price action of Silver Wheaton. When we look at gold, there's not a whole lot more that I can say about gold since the last video, except this line that we were watching here, this gentle sort of sloping uptrend has been broken to the downside, and it forced me to reevaluate my lines. I was doing a best fit line here, which was taking into account the low after the surge higher, and then forming a best fit here with these lows. That level was broken down, and we have since come down and seen this little bit of a bounce today right above 1220. So if this holds, if 1220 holds, it looks like we basically just have a slightly wider version of the initial pattern that I was looking at, this kind of a sloping uptrend here. And I maintain that there's this initial uptrend, 1, 2, 3 little data points from December and January that formed this line that was basically overlooked for the better part of the last 5 months, that is still just hanging out here and rising the whole while. And it looks like gold is waiting to intersect with this line here from the absolute lows. Of course, this may very well correspond with a retest of the support zone. Again, there's that theme, the support from the October high that held prices back then. Once broken, we expect this region to act as support. Now, if prices fall down back to this low, it's going to force me to reevaluate at least the trajectory for the grinding trend that we had in place. As of now, it looks to me, based on the action in the mining sector, the outperformance that I'm seeing, it looks to me like this is going to continue gently sloping upward before another re-challenge of 1305. If we break down over the next couple of days, I would say that we will have a new trajectory that we have to consider based on the failure at 1305 and perhaps a breakdown below 1205. 1205, definitely a level from late March that I want to see held on the price of gold to tell me that this trajectory is going to continue. So I know that's a lot for today, guys. Thank you for sticking with me. In summary, basically, as an absolute low, I want to see 1185 to 1190 hold for gold bullion. That continues the possibility for this bullish consolidation. Silver is at very strong support here at 1620 and is showing positive divergence when we look at the mining complex, especially Silver Wheaton, one of the strongest silver mining related companies. And please do not forget the shakeout that we are seeing in the mining sector, especially in some of the companies that were just approaching profitability at $18 silver and now have had that profitability seemingly yanked away from them as silver came back down to the 16s. Remind you the leverage effect that will be in place if one believes in silver to eventually be higher than $18 per ounce and perhaps even into the 20s, 30s, or re-challenging 50 at some point in the next couple of years, then the moves that we have seen thus far are just a very small warm-up to what will be possible at these higher silver prices. Thank you very much, and you do not want to let those shares be taken from you at this early juncture if you have at least a 2-year time horizon. I will see you next Wednesday for the next update. I really appreciate all the comments and all the people who have written to me. It's very nice to know that some people are finding value in these videos. It helps me to produce them because it forces me to articulate some of the thoughts that I'm developing in my mind, so I am thankful as well. Have a nice evening, and I will see you next week.